Good morning, investors and traders, and welcome to our channel in which we help you to become a more successful and more train you to take a more methodological approach in terms of your trading. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for a Bank of New York Mellon and as an equity trader for Bank of America. Currently, I work as a chief market analyst for EverTrade. Now, in these videos, what we really try to do is we try to cover several different markets such as Forex, commodities, equities, and cryptos, and really highlight the reasons why markets are moving to the upside, or what is the narrative which is pushing these asset classes to the downside, and really highlight those potential opportunities, whether it is a position to the upside or whether there's an opportunity where you can take a short trade, meaning you can benefit by selling it now. Now, when I look at the equity market today, the color is more red. What I mean by that is the European markets are trading very much flat because investors really didn't like the news which came out of Germany, where Germany will be extending its lockdown yet again into March. Now, of course, this is going to have negative influence on the stock market, on businesses as well. It doesn't matter whether it's a small, medium, or a large enterprise. The fact is that lockdowns are really have a negative correlation with economic activity, meaning the longer the period of lockdown, the less economic recovery we are going to see, meaning we are not going to see equity markets really pumping to the upside, meaning economic recovery will not take place that soon. Now, because of that, we are seeing a bit of pessimism in the market. If you look at the DAX index, which is the equity index for Germany, we can see that we are on track to record 3 back-to-back days of losses for the last 3 days. And that really indicates that concern among investors and traders. And remember, Germany is the largest economy in the Eurozone. And if economic recovery is not going to pick up in Germany, then it is unlikely that we will see massive recovery for the rest of the Eurozone as well. But in the Forex market, we are seeing a lot of momentum today. And that momentum was primarily driven by Jerome Powell, the Federal Reserve Chairman, who spoke yesterday and sent a very clear message to the market, which is the Fed is not going to change its stance towards its monetary policy. In simple English, the Federal Reserve isn't going to change its interest rate or its asset purchase program. What does that mean? That means the dollar index is likely to continue its journey to the downside. Hence, this was the reason that we saw this massive sell-off in the dollar prices, in the dollar index, which really pushed the euro-dollar pair above that critical mark of 1.20. And of course, sterling has moved higher today as well, and it is trading near 1.38. Now, we are not too far from our target, which we talked about previously, which is 1.40 against the dollar. Now, when it comes to crypto markets, Bitcoin prices seems like they could see some sort of a surge today, because I am seeing some momentum coming back in those markets. On the 4-hour time frame, the price action does look still very bullish, because the 100-day simple moving average has crossed above the 200-day simple moving average. In a very layman terms, this means bulls or the bullish momentum or the upward momentum is really likely to continue for Bitcoin prices, and that can push Bitcoin price from its 45,000 price level to its 50,000 price resistance, something which we've talked about previously as well. When it comes to Ethereum, prices are moving towards the 2,000 price level. Again, this is something that I've discussed previously in our videos, and the price target was mentioned in them as well. Now, finally, earlier today, I did discuss something really important about oil trade. Remember, we've been trying to short oil Brent prices for the last number of days, but the momentum has been strong. The most important thing when it comes to trading is not about being wrong, but it is all about risk management. And then that is the principle that we've been really teaching in these particular sessions, that every time we had a very tight stop losses because we are against a huge upward trend, but we know that the chances are that we may catch this move because a retracement is due when it comes to oil prices. Why? Because the prices have gone too far and too fast. Hence, it is very likely for oil prices to move to the downside. That's all for now, and I'll see you guys next time.